Hello viewers, in this video I'll be going over WTI, crude oil, ETF ticker symbol USO. Today we are at 1.6% up on the daily or 1 hour chart. I do see the 1 hour MACD turning positive and remaining that way for several hours, and on the 4 hour chart I do see a good possibility the 4 hour MACD turning positive as well. And on the daily chart, I see that we are at right on support of the 200-day moving average and the 50-day moving average. So we are on pretty stable floor. But if we were to break below that, the next support will be the 150-day moving average, and that is the price of $11.81. I chose that price because that is the support or moving average of 150-day moving average, and we see a concentration of price range at that level. But if we were to go on higher, the 18-day moving average will act as resistance. Why? As we examine closer, we see the 18-day coincides with past support, and as you know, support acts as resistance now. So if we were to move on higher, that price movement will be around 2.9% up, and if we were to move on down, that price movement will be around 7.7% move down. On to the next module, I'll compare today's current trend with this trend that dated back to May 21st, 2007 to August 15, 2007. I'll point out why these two charts are similar. So let's get started in the beginning of the trend. On the current chart, we found support on the middle Bollinger Band. We found another support, not quite touching it, but it acts as a good indicator of support. And then we proceeded to go on higher in an upward trend. So let me draw that. We got a trend up here, or a channel, and then we proceeded to break the middle Bollinger Band pretty fast, and we touched the bottom Bollinger Band right here, and onto the chart that dated back in 2007. So what we have here in the beginning is also support in the middle Bollinger Band. Not once, but twice right here. And we see that action here. And then we proceeded upward in a channel. And then after reaching or in the up channel for several days, it gave up all the gains and we immediately touched the bottom Bollinger Band as we see here. And I would say that this chart is more forward looking than the trend that we are in. And I do believe we may touch the, I would say, middle Bollinger Band first, or make a good attempt at it, and we may proceed on further down. But what we have here is 1, 2, 3, 4 points, and 1, 2, 3, 4 points that are similar. So if we were to compare, or if the two trends are similar, there's reason to believe that the forecast would also be similar. So let's check the forecast model. I'll go day by day where WTI or USO will head to in the next coming days. So 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So back then in May 21st, 2007 to August 15, 2007, USO was down about 2.9%, and anything can happen in the next coming days due to the Iran crisis with the US and the China trade talks. So either oil could go dramatically up or dramatically down. And here's the line graph that I compared the 2007 chart with, and that is all. If you enjoy this content, feel free to like, subscribe, and thank you for watching.